capital markets economics at Scotiabank. Great to see you, Derek. But first off, you note that there's a fairly modest reaction in financial markets. And you think one reason for this is that these tariffs, if implemented, would be destructive for American industry as well.
Yes, I think there are a few things to point out here, one of which is, listen, I mean, this would impose great damage upon American industries, the auto industry. They import an awful lot of Canadian oil. Walmart was already warning last evening that higher prices for American consumers would follow in the wake of such tariffs. You're seeing the U.S. lobbying effort kick into higher gear. And so that's an immediate cause for concern that the Trump plan won't be implemented in its full status. I think the other thing that markets are used to right now is they've kind of gotten used to the art of the deal kind of language. That Trump huffs and puffs and comes out, sounds very forceful, and then backs off. And we saw that in NAFTA 2.0, that he came in with a lot of threats about what he was going to do, but settled on an agreement that really didn't change a whole lot from a Canadian standpoint, and changed a few things for Mexico, but it was a lot better deal in terms of the risks than it could have been compared to what he was talking about. So the markets are taking a wait and see. Yeah, we'll believe it when we see it approach here.
Is there any sector that could be particularly vulnerable here, Derek?
I would like to think that it's improbable that they would impose these tariffs upon energy. For example, the large volume of Canadian oil imports, that would face immediate price pass-through into American pocketbooks. I would like to think that the very highly integrated auto industry on both sides of the border will be subject to a carve-out as well going forward. And so Trump comes in with his biggest bid, his biggest threat at the start of it all, 25% tariff on all goods exported from Canada to the U.S., and then he starts to pare that down with the lobbying effort that ensues on both sides of the border, both in the interests of U.S. businesses and Canadian businesses. But I would caution, I'm not convinced this is about fentanyl, the drug trade, and immigration and border security risks. I think really at the end of the day, Trump really does love tariffs. And it's more his belief in using Section 232 of the Trade Expansion Act of 1962, which provides him with national security reasons to impose tariffs for reasons that don't violate the existing trade agreements of the United States and anything that can threaten U.S. national security. So he's exploiting a loophole here. And now we have to negotiate and to try to get those carve-outs going forward. I think there's pretty decent probability we will face some tariffs, but I have a really big problem thinking that it's going to be as broad and high as he is suggesting.
And you note, I mean, it's not strictly an economic issue, but you argue that tariffs as punishment for allegedly not securing the border are not the way to deal with America's drug problem.
Exactly. I mean, that's a complex debate. That's the lack of a national procurement program. The fact that American drug prices, legal and illegal, are among the highest in the world. It's a very attractive market into which to export for a lot of countries around the world. Maybe we have to ask fundamental questions like, why do doctors prescribe so many opioids in the United States? Questions about income inequality and the socioeconomic problems that can often go hand in hand with drug issues. And tariffs are a blunt instrument. They won't solve any of that. That's not what this is about, in my opinion. And especially since, as your the previous person that you interviewed did a very good job of outlining, the amounts coming from Canada into the United States are trivial. They really aren't the material issue here at hand. And so I think it's instead, Trump is just exploiting a loophole to try, in the way in which he is thinking, to encourage Americans to buy more American goods, to discourage foreign imported goods into the United States, wherever they come from, Europe, China, elsewhere. And I think you're going to see that logic to be unwound, to be criticized, and to be challenged by a very sophisticated lobby group on both sides of the border going forward.
If some of these tariffs go on, not necessarily on Canada, but other nations, other countries that sell to America, it could be inflationary?
It could be. It's one of the key things here is, do countries retaliate when they see this happening? And a good example of the market reaction when they see retaliation is the MXN Mexican peso cross compared to the Canadian dollar. So that exchange rate. The minute Mexico's leader came out and threatened retaliation against the U.S. tariffs, the Mexican peso depreciated sharply against the Canadian dollar. The Canadian dollar is down a little bit, but not outrageously so against the U.S. dollar. The Mexican peso is down over 2%. And so when you have the threat of retaliation, you're imposing tariffs upon imported goods into a country. So your own consumers and businesses pay those higher prices, and you shoot yourself in the foot in response to the other country's tariff gestures. And so that is something we're hoping we don't see in Canada. I know it's tempting to think that retaliation, giving a shot back at the United States would be the way to go here, but we have to be very, very careful and counsel against that, because that's how you impose even greater damage upon the economy and more inflationary pressures. And that could be something that carries other consequences, like less easing by the Bank of Canada going forward compared to what would otherwise be the case.
We got his nomination for Treasury Secretary yesterday, a hedge fund guy, and Wall Street seemed to think immediately, well, he'll preach moderation on tariffs, but you say this raises doubt over it?
I think Trump calls the shots on tariffs, and we're going to be chasing his Truth and Social account on a daily, weekly, monthly basis throughout at least the first half of his mandate up until the congressional midterms. And that's what we warned about, that we should expect a significant amount of volatility in markets as we see all of these announcements and some of the behavior. And some of that is going to carry a cost in and of itself. It creates a climate of uncertainty. And uncertainty damages consumption plans, damages investment plans, makes C-suites relatively more cautious toward the outlook. You don't have to do anything beyond creating that uncertainty in order to create damage to the economic outlook and more risk aversion on behalf of a lot of people in the economy. And so that's something we want to try our best to mitigate and to avoid, but I fear that it's something that we are going to have to deal with. And then we can fall back on some automatic stabilizers as a bit of an offset to that risk, like the fact we have a flexible currency. We have a fiscal position that is far, far stronger than the United States. So if needed, we can apply fiscal stimulus to counter some of the downward influences upon our economy. We have as relatively strong corporate finances in Canada with interest coverage relatively sky high in the non-financial corporate sector. We have a safe, secure, sound, and stable, well-capitalized banking system in Canada now. It's not like we've had at times coming off the late 1980s with pressured balance sheets that were really a problem. And even in the household sector, we face mortgage resets. But we also have a massive glut of excess savings, both narrowly defined and wealth adjusted, because so much of the net worth gains over the past 5 to 10 years have been hoarded by households. And in that context, I think they have a lot of pent up demand, and we have the lagging benefits of immigration stimulus into the housing market with tight supply. So it's not just about tariffs. I think we have some other things here in the domestic economy that can help us manage through the consequences.
Thank you very much, Derek. Derek.